Wow. Dare I say it? Golly gee. The market went from a mildly bullish day, not just a bearish day, but kind of a catastrophic drop. What we just saw in a one-day movement was beyond a 2 sigma deviation. And for all those people watching that aren't really math nerds, it's not supposed to really happen. It can happen, but with super low frequency. The drop we just saw was brutal. I hope for those of you watching this that you caught the right side of it, and if you were on the wrong side, I hope you got out early enough. In this video, I want to break down not only my trade from the day, I'll make that really quick, but I want to break down exactly what happened and why the market went. That's what I want to explain. And most importantly, I want to get into exactly what you should be prepared for next, what you should be paying attention to next, because as I've been building up in the previous videos, we should be expecting high volatility. There's been a lot of signs that higher volatility, higher swing will be coming, and we're living in it now, so be prepared. That being said, don't forget to hit the like button. Don't forget to comment if you enjoy this type of stuff. It helps me out the algorithm. And most importantly, don't forget to subscribe. And now, let's rock. By the time the bloodbath was over on the day, here was the official headline. Dow closes 500 points lower, its 4th straight losing session and worst day since March of 23. Ouch. Now, I want to show you what happened in the Discord today, which you can sign up for. It's completely free, mattkohrs.locals.com. When you're signing up, if you want it to be free, use the code GOONY. It's in the description below. You'll see that I fared well. I made $450 today, about 1.5% on the account. Slow and steady wins the race. But you know who didn't do well? Piper. My cap and also my trading system around 11:30 called out bullish. Bullish 4 out of 5 confidence on the SPY, bullish 4 out of 5 confidence on the Qs. And it was looking good until about 2, and that's when the trains really started going off the track. So if you took the Piper signal, it was a loss of 352. I myself ended up getting out pretty early. I was in my position around 1050. I sold some put credit spreads on SPX. I was looking at 5,230, and then when it decayed down to 20, I went from 50 to 20, made $30 on each one. I had 15, so I made $450 before fees. And that sounds pretty simple, and Piper was looking good for most of the day, but it completely changes when you actually see what happened. Market, in relative to yesterday's close, a nice gap up, that's strong. Okay, we're holding the EMA cloud. Everything was looking good until about 2, which brings up the fair question, what in the world happened at 2 p.m.? Now, the answer to this is multifaceted. There's 3 things that you could majorly attribute this to, with one being pretty much the lion's share of the reason why we fell off. So one thing that happened, Biden calls for immediate ceasefire in Gaza. More specifically, Biden tells the president of Israel, U.S. support hinges on protecting civilians. Tensions have been building up with Israel and Iran to the point that Israel said, hey, we have no more political ties with them. And then the president of Israel spoke with the president of the United States for about 30 minutes, and there's just tensions boiling over. And obviously, when you have tensions on the global level, people don't like that. So that happened. But if anything, that's going to impact things more like Lockheed Martin, more specific companies, not be detrimental to the entire stock market. So if you want to know really what happened, you're going to want to look at the Fed. Kashari, possible Fed won't cut this year if inflation stalls. So what we're seeing is another chapter in the book of the market never believing the Fed, and yet the Fed's not lying. Coming into this year, as I've explained many times on stream, we've gotten into this situation where the market's like, oh, we're going to have 6 rate cuts. Fed's like, no, you're not. You're going to be lucky to have 1, 2, or 3. Another month comes by, inflation not coming down. They're like, oh, 4. And the Fed's like, what in the world are you talking about? No, we're not. And then another month goes by and we have more inflation. And they're like, 3? Are we going to get 3? And they're like, brother, listen to us. We've been explaining it to you that if inflation doesn't come down, you're not going to get your rate cuts. So that's been the story for January, February, March, and heading into April. The question is when are we going to get a rate cut? At this point, are we even going to get a rate cut? And it's not just Kashari. There's some other Fed members who are kind of saying the same thing. Goolsby, But if inflation continues to move sideways, makes me wonder if we should cut rates at all this year. There are some other ones. Those are obviously on the hawkish side of monetary policy. There are some dovish ones. Messer says Fed close to confidence level for cuts, so that's positive. But obviously, Kashari kind of stole the crown here. Kashari floats possibility of no rate reductions this year. Now, I do want you to know right here, if we look at the May, it's the end of April, start of May, the next Fed meeting, 87% shot of no rate change. If you look at the June one, there is still, at least at the point that I'm filming this, 62% chance that we're going to get at least one rate cut in June. But this odds are actually dropping coming into this. It was more over 70 and now we're kind of looking under 70. So it'll be interesting to see how this trends, but it's just a mess. It's all a mess. The reason it dropped is, and you could see it, right when Kashari went live on CNBC around 2, he started to say, we might not get any rate cuts. And the market was like, what did he just say? And then the bond market and the yield market started to react. And then the currency, particularly the Dixie DXY, started to react. And when all of that starts to go haywire, when you have bonds down, yields up, and the dollar starting to show some strength, what do you think stocks are going to do? They're going to tumble, and that's exactly what happened. Fed Governor Kugler backs caution on rates. Kashari expects only 2 or 3 cuts. Fed Reserve Governor Kugler said Wednesday inflation is showing solid signs of slowing down, but she is not ready yet to start lowering interest rates. So in other words, who's kind of playing it safe. I want that real data to show itself before we do anything, because none of these members want to move too early, because then we're going to be repeating what we saw a couple of decades ago, and that's a no bueno situation. They want to make sure that the beast that we call inflation is in control before they do anything else. Minneapolis Fed President Neil Kashari also expressed caution about cutting rates too quickly and said he only expects 2 or 3 reductions this year. Boston Fed President Susan Collins added to the cautionary tone, saying it will need to see some more evidence before considering adjusting the policy stance. The drumbeat you hear is soft landing, according to Barkin, though he also added he favors being patient on rates. So what's the tone here? The fact that they all said, we're confident, but we need to be really we need evidence, series of reports that things are good before we consider doing anything. They don't want to front run the rate cuts. They don't want to, and they're not going to. And then obviously the icing on the cake was when Kashgar's like, you know, brother, we might actually get zilch, goose egg, nada, zero if we don't get those inflation reports. So just something to consider. That's the explanation of why everything dropped hard. But there was one other thing. Don't forget, I said there was 3. Remember the whole thing with Israel, Iran? That was a little bit. Then there was this main thing. The third thing is we're heading into a big, important report. And a lot of people like to be risk off heading into these reports. So to conclude the week, and also really the first week of April and of the quarter, 8:30 a.m., an hour before the market opens, we are getting the new unemployment report with the line in the sand now at 3.9%. When you have a big macroeconomic report that in one way or another is related to the state of the economy and inflation and the jobs market, that's going to have a big impact. Obviously, above it, below it, that's going to be bullish, bearish. It's going to cause craziness. It comes out an hour before the market opens. And there's a lot of big players who are like, you know what? I don't even want to risk it. So I'll close out my positions now. And based on what is or isn't announced, I'll make a new position tomorrow. So I want to throw that out there on your radar. I also want to let you know that I'll be streaming it. So if you want to wake up early, pour yourself a cup of coffee, and then obviously don't forget to tune in. I'll be streaming around 8:20. On top of that, even though not as impactful, we're going to get another continuation of more and more Fed speakers tomorrow. So after the unemployment report, Barkin talking again, Logan talking again, Bowman talking again. Like, do you see where we're going here? Do you see how every single day we're getting craziness because of all the Fed members speaking? Buckle up, Buttercup, because things are gonna remain crazy. And if you want handy dandy newsletter every single weekend that calls out all these major events for you, sign up for it. Locals, not only do you get the newsletter, but that's how you can get connected to the Discord that I mentioned prior. Now, just to really wrap this up, I do want to do a little bit of a charting just to show you how crazy today was. This type of day, a bearish engulfing channel where we go from being up, what was it, roughly, at one point we were up 0.86% to now we are down at one point we were down 1.28, concluded the day down 1.22. Like I said, this is beyond a 2 sigma standard deviation move to the downside. It's bearish engulfing, which we only see 5% of the time to begin with. This was statistically a very, very rare day. And I'm saying that just in case you got completely blown up today, understand that this wasn't par for course by any means. Obviously, you should always be protecting yourself, but I don't know. I want to let you know that maybe when you take a breath and zoom out, you realize that today wasn't some sort of catastrophic bear market day. We literally just hit an all-time high of 524. So yes, it's brutal if you're an active intraday trader and you're looking at the minute, the 5-minute chart. But by the time you look at the daily chart, the weekly chart, the monthly chart, you're like, oh, okay, yeah, we're taking some form of it's a breather. Yeah, a brutal breather, but a breather nonetheless. So that's what I have for you. Fortunately, I got out of the day unscathed, made a little bit of money, slowly getting that account back up. I'm on my comeback journey, my comeback tour, if you will. And in terms of the market, his name is Kashari. If you want to know why things went bearish, it's because the market brutally reacted to CNBC's interview of Kashari saying we might get 0 rate cuts this year. And then when you add in some global conflict and when you add in a big important macroeconomic report, all that uncertainty, things are bound to get bearish. And when there was some selling, people panicked, prompting other selling, which prompted more selling. And you see how it quickly snowballed. That's what went down today, and that's what you need to pay attention to tomorrow. Lots of stuff going down. That's what I have for you. I appreciate you making it to this moment in the video. Thank you, thank you, thank you. I'll catch you in the next one. Peace out.